It was near the end of the trading day. The market was about to close. You sat there alone, staring at the screen, frozen. On your trading screen, the account that was once full of hope at the start of this morning's session was now nothing but red. Only a few dollars left. 99.9% had vanished. And just now, you made that final click, burning the last few cents left in your account, out of anger at yourself. You stood up. Your head was spinning. Your mouth was dry. Your arms and legs felt weak. Your mind was a mess because you had been torturing yourself the entire day. You failed again. Everything that happened today had only passed in a few short hours, but it was all still there, clearly written in your trade history. Just this morning, you were excited for the new day. You promised yourself you would stay disciplined and push the account to a higher target. You wrote down all your trading rules on paper, along with notes stuck on your screen to remind yourself. As the session started, you saw an opportunity. You took it. The first winning trade got you excited. You made yourself a cup of coffee to stay sharp. But on the second trade, you got stopped out. You told yourself it was okay. The account was still in profit anyway. The third trade lost too. Then the fourth. Then the fifth. You had just taken 4 losses in a row. Without even realizing it, on the next trade, you didn't place a stop loss anymore. You went all in with the entire account, hoping to win back what you had lost. And the market went your way. The account turned green again, quickly climbing back to break even. You rushed to close the trade the moment all your losses were recovered. You felt an overwhelming sense of relief, as if the weight of those 3 losing trades had finally been lifted off your shoulders. After that, the market kept exploding in the exact direction you had predicted, even though you had already closed everything. There was some regret, but at least you had achieved your goal, recovering your losses quickly. You told yourself there was still the whole afternoon ahead, so you went to get yourself some food and recharge. When the afternoon session started, you came back confident again. You reminded yourself one more time to be careful, to stick to the rules. Sitting there reviewing the morning session, you realized that if you had followed your plan, you should have won 2 trades and lost 3. That would have been plus 4R and dash 3R. Still plus 1R profit, without risking everything just to end up break even. You told yourself that, after all, you did have skill. You were capable of making money. In the afternoon session, your first trade was perfectly according to the rules. This time you lost, but you felt okay. Dash 1R was not a problem. The second trade, you followed your rules again, and you won plus 2R. Now you were up plus 1R for the day. Feeling confident, you entered your third short trade. This time, the spread widened and hit your stop loss. And right after that, price moved aggressively in the exact direction you had predicted. You felt robbed, like you had been unfairly stopped out and lost the profit that should have been yours. Almost like an instant reflex, you jumped back in with a FOMO trade, using the biggest position size possible, trying to take back what was rightfully yours. The market kept dropping hard. Now you were in profit, even more than the profit you had lost from that unfair stop out. But suddenly it stopped and started pulling back. You told yourself it was fine. It would continue, just a small pullback. But your position started going negative. Even then, you kept reassuring yourself it was only a pullback. This time, with your entire account at risk, remembering what happened in the morning, you thought if you could just be patient and wait for one more move in your direction, you could make a huge profit. And you decided to wait, patiently. Unfortunately, price kept pulling back, climbing closer and closer to your original entry, near your old stop-loss level. Your account was now floating at minus 90%, because you had risked the entire account on this position. You started to panic. Your face felt hot. Your heart was pounding. Your muscles tightened. Regret and fear began spreading through your whole body. You switched down to the 1-minute chart to watch closely. Every small bearish candle gave you a little relief. Every bullish pullback made your heart tighten again. But the structure was clearly still pushing up toward the stop-loss level, the place where your entire account would be wiped out. Suddenly, a 1-minute candle shot up hard. Your face burned. You couldn't take it anymore. You immediately closed the position, locked in a minus 60% loss. Only 40% left. As if there was a demon inside pushing you, you instantly flipped your position, entering the opposite direction with everything left in your account, hoping to recover the loss that had now become a massive hole. You told yourself, if this trade still risks 40% of the account, then 2R means 80% profit. I can get it all back with this last bullet. Ironically, right after you entered, the market froze for a moment, then suddenly dumped hard, continuing in the original direction. The entire remaining 40% disappeared in the very next 5-minute candle. Your account got liquidated from margin exhaustion. Only a few cents were left. You collapsed. You looked up around you. A feeling of despair, emptiness, pain, and regret flooded through your body. What made it even worse? This wasn't your first time. You had repeated this cycle over and over again. From personal accounts to funded accounts, always ending the same way. Hope, then disappointment. Excitement, then pain. The harder you tried, the deeper you dug the hole in your trading. The worse the results became, and you couldn't tell anyone. Your family didn't know, because if they did, they would only blame you even more. Your coworkers and friends couldn't know either, because if they knew, they would say you deserved it for choosing a profession that people call gambling. If you've listened this far, chances are you've already seen part of your own story in this. Looking back at the account, you didn't lose because you lacked the ability to read the market. Not because you lacked analytical knowledge. Not because you lacked a good strategy. The trading day in this story could have been a normal day. Could have even been profitable if the trader had managed risk properly and didn't allow psychological triggers to destroy the entire account through revenge trading. Maybe after calming down, that trader would realize if he could just remove revenge trading from his process, he could actually succeed in this profession without having to keep going through this mental hell. But unfortunately, that is incredibly difficult until you realize that revenge trading is an instinctive behavior that has existed deep inside our ancient brain for a very long time. Millions of years ago, when humans had to face brutal living conditions, the world was full of predators, wild nature, hunger, competition for resources, and survival. In that environment, the human brain developed an incredibly powerful mechanism. Whenever it detected danger or loss, it instantly activated survival mode. Fast, strong, aggressive, decisive, no overthinking, no meditation, no weighing risk versus reward. Of course, there were no charts, no data, no concept of markets. It only had one goal: act immediately to survive. If our ancestors saw a saber-toothed tiger charging at them and stood there analyzing probabilities, they would die. That's why evolution rewarded fast reactions, strong reactions, emotional reactions. A single bush moving could instantly trigger full survival mode, fight or flight. Today, even though we no longer live in the wild surrounded by deadly threats, the brain still interprets financial loss as a form of pain that threatens survival. When you lose, the brain does not understand that it's just part of probability. It only understands, I just lost resources, and that directly threatens survival. Action must be taken immediately. Take it back, fix it, recover it, at all costs. That is the core root of revenge trading. When your account goes negative, the same brain that once helped our ancestors survive in the wild activates and takes over the mouse for us. And that is why sometimes we cannot stop until the entire account is gone. Only then does the rational brain come back, questioning itself, blaming itself, making a new plan with complete clarity, fresh determination, new slogans, and reminders taped to the screen, only to collapse again in disappointment when it fails to defeat its own instincts. The problem here is not that you are weak. It is not that you lack willpower, discipline, or structure. It is that you are trying to use logic to defeat a survival system that is faster, stronger, and far more ancient than reason itself. And once that system is activated, logic almost always loses. So what do? The solution is this: do not let yourself fight in that state. Build systems to stop it before it starts. Just like you cannot negotiate with a fire once it is already burning. You build fire prevention systems before the fire happens. Preventing the fire will always be cheaper and far superior than trying to put it out later. The same applies in trading. The first principle: reduce the damage potential of every decision. If each trade only risks 0.5% or 1% of your account, your brain is far less likely to treat it as a life-threatening event. But if each trade risks 10%, 20%, or you go all in, then don't be surprised when your brain triggers panic. Because to it, that truly feels like life or death. Big risk doesn't just kill your account faster. Kills your psychology first. You stop trading based on your system, your setups, your process. You start trading based on P&L, profit, and loss. The second principle: set hard limits before entering the battlefield. For example, lose 2 trades, stop. Lose 3 are stop. Break your trading rules, stop. You need to understand that if you keep going, the ancient brain will appear. And at that point, you are no longer you. The third principle: understand that losing is a business expense, not an insult. It is not your identity. A losing trade does not define you as successful or unsuccessful. You are still a human being with full value. A loss does not say anything about who you are. The market is not against you. A losing trade is simply the cost of renting your place in this long-term probability game. No trader wins every trade. No one. Not even the legends managing hundreds of millions or billions of dollars. The fourth principle: a successful trading day is a day where you followed your rules, no matter the profit or loss. A losing day with perfect discipline is a great day. It means your business paid the cost required to keep operating, so it can become something much bigger in the future. But a profitable day without discipline reinforces bad behavior. It rewards mistakes, and repeating those mistakes over and over will eventually lead to catastrophic consequences in your trading career. Always focus on the process. Never focus on profit and loss. But understanding these principles is only the necessary condition. Because once the ancient brain gets activated, all principles can still be destroyed by survival instinct. The sufficient condition is this: build physical barriers to stop self-destructive behavior. First, after entering a trade, once your stop-loss and take-profit are set, whether you win or lose, turn off the screen. Write your trading journal. Write down your emotions when placing the trade. Tell yourself, "My job is done." You are no longer responsible for the result. You have already done your part. You did your job well. Now let the winning and losing trades do their work. If your trading system has positive expectancy, it will produce profit over a long enough series of trades. Second, when you hit your daily loss limit, for example, 2 losing trades, end the trading day. Go for a walk. Return to real life. Let your dopamine levels come back down. Lock the account. Turn off the machine until tomorrow. The market will always be there. It never disappears. Opportunities are endless. And if you are still calm, still clear-headed, and do not feel urgency, do not feel emotionally triggered to recover losses, Then you can continue waiting for opportunities only when all your trading conditions are met. But the better option is simple. Shut it down and walk away once your daily drawdown limit is hit. Third, if you have several losing days in a row, when the losing streak reaches 3, 4, or even 5 trades, understand that this is completely normal. What happens next will determine whether you become a legend in this business, or just another person who quits. Continue following your trading rules. Accept the losing streak, and if needed, reduce your risk. That will feel unnatural. It will go directly against your instinct to recover. But it is one of the smartest ways to avoid digging the hole deeper. And you will notice something almost magical. Recovery often starts when you reduce risk, because now you are calmer, more relaxed. You see the market more clearly. You are no longer overwhelmed by emotion, and that allows you to rebuild confidence, regain momentum, and recover the account. Most traders do not blow up because they lack strategy. They blow up because they do not understand themselves. They do not understand that in moments of loss, what is controlling them is no longer logic, but an ancient survival machine that only knows how to react, recover, and repair pain immediately. And if you do not understand that, you will keep repeating the same cycle: loss, panic, revenge, collapse, then promising yourself you will be different tomorrow. Trading is not a battle to always be right. It is a battle to stay conscious in uncertainty, to accept losses, to protect capital, to survive long enough for your edge to play out. Because in the end, the winner in trading is not the smartest one. It is the one who survives the longest. If you've listened this far, then you probably understand what I wanted to share with you. And I also believe you are a serious trader, hardworking, putting in real effort, searching for your own path to success. Subscribe to the channel and stay with me. The lessons ahead will be incredibly valuable for your success in trading.